Hello everyone, this is the pre-market report video for today 19th June 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, let's look at the quick takeaways from yesterday Indian market. Most of the positive reasons like Monday night US market, windfall tax, income tax rumor and increase of Indian export all we already discussed in detail in the last pre-market video. In addition, yesterday during our market time, Fitch rating raised the Indian GDP forecast for the current financial year from earlier 7% to present 7.2%. Here, they not just raised the India's forecast, they also raised the whole world GDP growth forecast to 2.6% from earlier 2.4%. This, again US market positivity, together made all the Asian market also traded and closed positive. So, not just Indian market, whole global momentum was good. Anyway, moving on. Yesterday, when I'm analyzing the open interest volume, I found this very interesting thing. If required, please pause and have a look. In the index options, there are slightly more number of retail sellers in both call options as well as in put options than that of number of retail buyers in both call options and put options. In direct contrast, if you look at the FII volume, there were more number of buyers in both call options and put options than that of the sellers. Here, please note, I'm not saying FII bullish and retail traders are bearish, not like that. This retail and FII open interest volume data is not suggesting that. For that, we need to do a bit more analysis, even though it will give only a rough idea. If anyone interested in it, please let me know in the comment section so I can make one video for Saturday. Anyway, what it's suggesting is retail traders are slightly inclined towards non-directional and FIIs slightly more inclined to break out on either side. However, if you see the professional investors, in call options there are more buyers, whereas in put option there are more sellers. Here, this professional investors data indicating they were more inclined on the bullish side. So, whom we should trust? Retail traders, FII or professional investors? Honestly, I don't know, so I leave that choice to the viewers. Disclaimer, don't make any investment decision based on this, but just understand what data is suggesting and understand the mindset of each group. Just repeating, retail traders more inclined for directionless, FII inclined for breakout on either side, and professional investors inclined towards the positive momentum. Hope I'm not confusing. Then, regarding future market open interest, all retail, FII, DII and professional investors all having the balanced portfolio. Approximately 50% long and 50% short. It has been same roughly for the last 3-4 trading sessions. Other than that, for the second day in a row, both FII and DII were net buyers. FII net bought for 2,570 crore rupees, whereas DII net bought for 1,560 crore rupees. So, these are the quick takeaway from yesterday's Indian market. Then, moving to US, before their market opening, their government released their May month retail sales data. Monthly basis compared to April month, core retail sales decreased 0.1% and the overall retail sales increased by 0.1%. Either way, both of them way less than what market estimated. Here, this is considered as positive for the market since this increased the Fed rate cut chance to near 70% on the September month. In comparison, last week it was around only 55%. However, in response to this macro, US market didn't increase much. All three closed around flat. Dow Jones increased by 0.15%, S&P 500 up by 0.25% and Nasdaq closed around absolute flat, whereas VIX decreased by 3.5% and moved down below 12.5. Meaning investors are not hedging, so unlike yesterday, they are slightly positive about the market. And in line with this week retail sales data, as I said, it increased the hope of rate cut, which in turn increased the expectation of oil demand pickup. So oil price increased around 1%. At the time of this video, Brent crude trading around $85.5 per barrel and WTI crude trading near $81 per barrel. Regarding Indian ADR, only Infosys closed slightly negative and Wipro increased similar percentage same as Indian market. So if we calculate the 1 month arbitrage, then both Infosys and Wipro both are indicating the flat opening. Whereas if you see the banks, both ICICI and HDFC Bank both closed more positive than Indian market. So there are indication of positive trade in both banks. About Gift Nifty, today early morning it closed at 23,672. Yesterday, premiums fluctuated between 30 to 50 points. Hence, equating that for now, it's indicating the gap up opening of 60 to 100 points. So, these were the things happened in the global market. Now, let's discuss the new India related info. First, today, Vodafone expects to sell 1.1 billion US dollars worth of Indus Tower shares, whereas yesterday, Goldman Sachs sold Paytm shares worth of around 100 million US dollars in the block deal. So, both Indus Tower and Paytm will be on focus today. Second, Cipla made the announcement that they are going to invest 3 million euros for the research on mRNA treatments. Generally, any new science related investment, market took that as positive. Let's see how it's reacting today. Third, yesterday Jefferies said that they expect foreign FPI investment in Indian equities expects to turn around in the second half, as now the political uncertainty is over, which is the exact same thing what we have been discussing for the last 1 month. Finally, for the second day in a row, Indian Meteorological Department issued the monsoon warning that this year they expect only 92% of average rainfall. I mean, Monday market didn't care about it, but again for the second day, I'm not sure. As a summary, US market closed flat to positive. Similarly, IT stocks were flat, but global momentum is good, banks ADR is good, and Gift Nifty indicating gap up opening of 60 to 100 points. Then, as per stock open interest, Dr. Reddy's, ABB, Maruti, Lupin, and Muthoot Finance got an increase in open interest along with a negative close, indicates the short build up. On the other hand, Motherson, Jubilant Foods, M&M Finance, City Union Bank, and Alchem Lab got an increase in open interest with a positive price close, indicating the long build up. About the things to look out, today early morning before our market opening, lot of Japanese trade data is scheduled to release. Then during our market hours, UK's consumer inflation, European Central Bank non-monetary policy meeting are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 90 points gap up and it was about 23,500 throughout the session and finally ended at a new closing high 23,558. Thus, on the daily chart, Nifty formed a doji candlestick pattern for yet another session, which again still indicating the indecisiveness among both buyers and sellers. However, Nifty continued its higher high formation with a positive bias in both RSI and MACD momentum indicators, which indicates further uptrend from the current level. I mean, for the last few days, Nifty has been moving sideways on an intraday basis and the trade volume was below average, but eventually it has moved up about 23,500. Hence, the trend looks positive with support placed at 23,300. A fall below 23,300 might induce selling pressure. On the higher end, Nifty might move towards 23,800. In case of Bank Nifty, it opened 180 points gap up and then rallied to 50,441. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern with a lower shadow, indicating buying interest at lower levels. And finally, Bank Nifty broke out of the resistance 50,200 and managed to close above it. In addition, similar to Nifty, Bank Nifty also maintained above all key moving averages and the RSI and MACD momentum indicators, which got a positive bias. Hence, the positive momentum is likely to continue and potentially might drive the Bank Nifty higher towards 51,000 mark and the strong support is at 49,700 mark. On the weekly options front, the maximum call option open interest was at 24,000 strike, followed by 23,800 and 23,500, with maximum new call option writing at 24,000 strike and then 23,800 and 23,600. Whereas on the put side, the maximum open interest was at 23,000 strike, followed by 23,400 and 23,500, with maximum new put option writing at 23,500 strike and then 23,000 and 23,200. Thus, from options data, it's indicated that 23,600 to 23,800 is the next immediate resistance area for Nifty with support at 23,400. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.